Welcome traders to Admiral Markets webinar of the 17th of March, where we're going to take a look at the euro dollar challenging the 140. Besides the euro dollar, we're going to take a look at the pound dollar, dollar yen, and AUDUSD currency pairs on the charts. But first of all, though, the disclaimer explaining that the online material here has been made for a global audience, and please, to get the corresponding info on charting conditions and other details, please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Then, of course, the risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Please pause the video to read the entire disclaimer, and we do thank you for your attention. Before we actually look at the chart, let's take a quick look at this educational guidelines webinars we have this week. Interesting stuff. We have our usual weekly Forex recap with Tarantula tonight. Tuesday, Wednesday, Thursday, we have our live trading lab. We're going to look at range trading, price action and support resistance, and Fibonacci wave trading. And I'll be explaining to the exact details how you can actually trade these topics at Tuesday, Wednesday, Thursday. And then we have, for instance, our Pro Learning Lab, best candlestick patterns coming up Thursday. So great topics. Looking very much forward to see you in one or all of these webinars, in fact. Let's take a look at the euro dollar. The euro dollar weekly chart posted again a bullish candle last week, in fact, although there was a bit of a wick at the top, and we can see that if we connect this trend line, we have a trend line that has three tops, but that's not confirmed as yet. So we're definitely in a bullish mode. We have already 6 weeks of upside, and let's see if we can continue with that momentum to the upside yet again this week. Now, obviously, we do see the uptrend here on this weekly. We have the blue lines indicating that uptrend channel. So let's see, we're pretty close to the top of that uptrend channel. If we zoom into the daily, what I'm thinking of personally is a bit of retracement before we continue up. If you look at the bigger picture and you start to put fib targets on it, you can see that price stopped here at the 50 fib, for instance, here roughly at the 6178.6 fib, and those targets are higher. Those targets are on 140, 141, 142.50, 143, 144. So for price to get there, we would be taking out those targets. That does seem likely to me, but because we've extended pretty much far from these moving averages, we could see price go back to those moving averages, use those as support, and then bounce up to the targets. That's something I'm looking for this week. Although, of course, when the week just starts, price has to kind of warm up, and it'll be interesting to see how the price action develops. You can see here already the 4-hour chart, we had a very strong down move. This could be a hook back for one more down move to these support areas right in here, for instance, and this long-term moving average and these bottoms. So that's something I'm keeping an eye on. If price does break above this top and does break one above 140, of course, then that bigger correction is probably not going to happen, and we might see some more upside potential on this euro dollar. The pound dollar, well, I'm not too big of a fan of the pound dollar at the moment, and that has everything to do with the fact that we're just stuck in a very big consolidation. This is lasting pretty long, and it's taking a long time to play out. We're still just basically above or around the 38.2 fib. If price gets to the 50, that could be a bouncing spot for the upside, right? That's at 165.37. In the meantime, though, if we zoom into the hourly, we can see there's a lot of choppiness, and personally, I wouldn't be surprised to see price maybe go up to retest this trend line and then bounce off that and go retest this trend line. Seems to me that we're stuck in this triangle and waiting for a break of this triangle basically to get some idea where the pound dollar could break to on this 4-hour chart. All right, let's take a look at the AUDUSD. The Aussie actually looking a bit more interesting than the pound, certainly, because you can see price in this uptrend, according to the magenta trend line. Although price tried to break through it, it did bounce off the 88.6 fib. So in that regard, we're continuing with higher highs and higher lows. And if we look at the potential target, then we can see that there is space to the 50 fib. This is a daily fib, and we're looking at the 4-hour chart at the moment. The 50 fib daily is at 92.08. We also have a minus 272 target around 92. So that potential is present on the AUDUSD to go to that level, or even maybe higher to the minus 618 and 61.8 at around 93.38. So looking for that continuation. In the meantime, though, price would have to break through this trend line here so that we know that this is a potential triangle and we're breaking out of that triangle, right? If that doesn't happen and price breaks through the magenta and breaks through probably this purple line as well right in here, then actually price is not continuing up and we're going to make a breakout, most likely, to retest this bottom. So those are the key lines in the sand here on the AUDUSD. And then last but not least, the dollar versus the Japanese yen. And what we see an interesting pattern here. This is looking corrective, in fact, this upside, or a bit corrective, at least the last part here in the middle, and this impulse that didn't go too far and didn't break magenta. And in the meantime, we're getting a pretty hefty rejection to the downside. A lot of momentum to the downside here. Good, big daily candles showing a lot of bearishness. So, looking at that, there is a potential pattern here where we can see the downside followed by a correction up to the 61.8 fib. The target of that is the minus 272, in fact, at 99.50, although we have a 61.8 fib at around 100. Okay, so it could happen. Now, we are close, though, to this support level. So that's something we have to be careful of and be wary of, because that could be a bouncing spot and we stay in between the purple magenta line, right? Like this. If we do break to one side or another, then if we break to the downside, we could see that maybe the space down to the 61.8, and if we break to the upside and above magenta, we can see some potential up to the purple line right at that blue square. Well, folks, thank you so much for joining today, the 17th of March, in this heads up video. Looking forward to see you tonight, tomorrow, Wednesday, and Thursday. In fact, we have a lot of good sessions where we take a look at live price action and live trading. We're going to take a look at how to trade ranges and how to trade fibs, and spell out exact trading plans in detail. So looking forward to see you then, and wish you all a great trading week ahead. Cheers.